Welcome back, David. How are you?
I'm good. Good morning. Good to be back with you, Dale. How are things? All right.
Yeah, things are okay, Dave. Interested in what you're seeing. We've had it's like a beach ball, this market, isn't it? A great metaphor for, they have it underwater and it bounces back, and then you get a settlement case from Google. And
Yep.
yesterday it tried to break down out of a rising wedge, the
Yeah.
S&Ps, and didn't. And then the NASDAQ 100 went back to previous lows, and it's a flat horizontal support level. Um, in fact, I think it's the first time in a while that NASDAQ didn't lead to new highs while the S&Ps made new highs. What do you make out of that?
Yeah. So there's so many different things going on right now, Dale, to be sure. Two different important things you mentioned, and then a bunch of other things we can talk about too. But number one is the price action in the S&P yesterday, I think was pretty important. And you'd mentioned this rising wedge, right, which is a classic technical price pattern where you have an uptrend, and then you have this kind of narrowing of
Yeah,
higher highs and higher lows, but just the two lines are gonna convene here down the road. And so we're kind of narrowing, we're kind of bringing the volatility in a little bit. And so yesterday, kind of mid-morning looked pretty negative because we had
yeah,
broken below that lower support. But what
yeah,
happened into the close, I think, changed the configuration or changed the complexion of what we saw yesterday. You saw buyers coming in, going into the end of the session, and so that really became more of a hammer candle, more suggesting there's some short-term optimism and buying on weakness. So I don't think while earlier in the day it looked like that was a pretty valid breakdown, I don't think you can sort of check that box off just yet. So
no, you
I'm
can't.
focusing a little bit more on follow through. So I have this line right around 63.40, we'll call it. And I
Yeah,
think breaking below that, breaking below the 50-day moving average, that's when things you can legitimately say things are getting worse. For now, it still feels just noise.
yeah. I was saying to Blake that I don't know if we're going to make a new high. We could, but there's one thing I learned from yesterday is I have a bull bear line under
Yeah,
yesterday's lows across the board. So
yeah, yeah.
we didn't know that till yesterday. So that's the new information.
That's right. That's
That
right.
that's so critical, that low to hold, and if not, I
Yeah.
think the correction's underway.
Yeah, that and honestly, this is a classic way of using candle patterns. And Steve Nissen years ago, who
Oh
really is
yeah,
credited with,
yeah,
introducing the West to technical or to candlestick patterns, would always say those 1 or 2 bar candle patterns have a built-in stop to them. So anytime you have a hammer candle, you really want to focus on that low. Same with like a bullish engulfing pattern or any of those other kind of, patterns. That's why a lot of times I see a pattern like that, I immediately draw a horizontal line away from there because I've learned that those levels have meaning. It's often like a pivot point. So I would wholeheartedly agree with what you said. And it's also worth noting, by the way, that going into that high a couple days ago, still on weaker momentum. And I think
yeah,
that's probably the biggest concern I have besides the lack of support from the NASDAQ 100 that you mentioned, sort of a
yeah.
non-confirmation there. The fact that these new highs are coming on weaker breadth and weaker momentum, I mean, glaring, pretty clear. It almost jumps off the chart to me, at least.
Yeah, the momentum does, but didn't Breath just make new highs a week or so ago to confirm the advance?
So it depends on what measure of breadth you're looking at, right? So
Okay,
these are the advanced decline lines for the New York Stock Exchange, and then the
okay,
S&P 500 large caps, S&P mid caps, and then S&P small caps on the bottom. And you
okay,
can see that the S&P 500's advanced decline line has made a new all-time high. It made one
yeah,
in August, but none
yeah,
of the others confirmed it. And I think
interesting.
that's something that's standing out to me in the month of August is the NYSE's advanced decline line, which is probably the biggest, broadest universe that I'm showing here. Hasn't broken out yet. The mid cap advanced decline line actually broke below its 50-day moving average yesterday, and the small cap one is right about there. So, these are not horrible readings, right? It's not telling you that breadth is in a full decline, and most stocks are above their 50-day moving averages and all those things that are good signs. But I'm getting lack of confirmation, right? When the S&P or the Nasdaq are breaking out and then all these other kind of supporting indicators are not. That just I've learned to be cautious in this sort of configuration.
Okay, so we were talking about candlesticks and gaps. The gap that we had down in TLT yesterday, led by a rout in the gilts
Yeah.
because of a cabinet move. Does this gap, unless it's filled, could it be a breakaway or just a common area gap? What would
Yeah, I don't know if it
determine
was
that?
Blake's chart or whose chart we were seeing, but someone I
Yeah, it's
saw,
Blake.
I think the
Yeah,
bond futures, and we're showing a similar trend line. I'm using the TLT here for bond prices, but
right.
very tracks very similar. And I think that trend line off the May and July lows is an important one to watch here.
Yeah, yeah,
Anytime you have like a big gap, drawing some trend lines can help you just put it into context, right? And just understand what's happening. But if what you mentioned about this gap, Dale, I think looking back to this gap that we had at the end of July might be a
right.
good kind of cautionary tale, right? We had this gap higher, which
Yeah,
felt very bullish for bonds for about 72 hours. And then look
right.
at how quickly that gap was filled, which really suggested that was the end of the move. And now we're coming back and rotating lower. So I think what happens immediately after this gap usually is super important. So,
Yeah.
for me, I'm probably going to just draw a little area right here, covering this gap, and then focus on that trend line. One of those is going to break here probably through the course of this week. And I think
Oh, yeah.
whichever way we break, that's the next direction of momentum for bond prices. And that could be a pretty pivotal moment for sure.
Okay. I started a campaign trade in the widower maker, natural gas. I was wondering, not the widow maker, Dave. I'm changing the name to the widower breaker because the husbands are going to make so much money, it's going to give their wives heart attacks. So it's going to be the widower maker.
I
So
like it.
I was wondering if there were any stocks or ETFs in that sector that when you like natural gas that you trade. So you trade
Yeah, so when you're
UNG?
thinking of like natural gas and other things, you often have, especially as an equity investor, you usually have a couple different choices, right? You can go futures, ETFs, you can do individual stocks and all of these. For me, the names that have often made sense are sort of these, infrastructure names, the pipeline names.
Okay.
So, when I'm thinking about natural gas, I immediately go to something like Williams. Those would be the ones that I would be looking at. LNG is another one that immediately comes to mind. These stocks aren't looking particularly strong just yet. Williams is kind of at
No.
the lower end of the range. LNG is actually pretty close to breaking out. So on LNG, I actually have an alert set for over 245, which is, I mean, really where we've been at here for the last couple sessions. So, for
Okay.
me, I'm more of a breakout trader. So I'm looking for a push above 245, which would be like kind of a classic entry point for me. But the chart of natural gas, I was showing the UNG earlier. It's
Right.
obviously been in a primary downtrend for a while, but showing a nice initial bounce off of the lows. It's
Yeah.
just testing the 21-day exponential moving average, and that's often an initial entry point. When I have something that's been in an established downtrend, that's usually the beginning of a recovery, and something
Yeah.
I'd be looking for here in the coming sessions.
So the reason we're at new lows is because of the expenses of the ETF, because the low that we had in November in nat gas, we're putting in higher lows on the nat gas
Yes,
in here.
yes, yeah.
So, that's the disadvantage of these ETFs is the costs and the hedging and whatever else they do.
And also the premium and discount, which can often be a confusing thing to get your head around, right?
Yeah,
Where things trade
yeah,
further and further away from their net asset value, that's an issue as well.
yeah. Well, I think even a bear market rally could take it back to 16.
For sure, for sure.
And so that's what I'm thinking. I wanted to ask you about what you're doing as far as NVIDIA. It
Hmm.
started to act poor. It had all kinds of divergences. We actually had a gap down yesterday, a lot of
Yeah,
gaps.
yeah.
I don't know how big the gap was, but I think we're coming in higher. Is this just a simple ABC and we're just going to blow to 185, 195? or is this vulnerable for a move to 150, 140? Um, are we going to see the first signs, even though it's probably not the end of it, of people, there's some talk about the AI bubble out there now, and all these companies have poured billions into it, and they're really not getting much of return on
Yeah.
investment.
Yeah.
Could we see Nvidia um, shake things up a little bit this September?
I mean, so from sort of the big picture perspective, Dale, which what we have to remember is that there's a big difference often between the promise of a new technology like AI, the transformation it's going to, I mean,
Right.
it's already obviously changed the way that all of us operate. I mean, I used ChatGPT a couple times already this morning, doing quick research and things like that. And so it's definitely changing it. But does that mean specific stocks are going to be leaders and or are going to be able to profit from the growth in this technology? And that's very much an open question right now. And I think Nvidia's earnings most recently sort of, I think maybe a wake-up call for a lot of investors, just sort of assuming that this kind of trade just keeps going up forever. At some point, trades like this, you lean way too far over your skis, and the promise of the technology, sort of overcomes or over is overemphasized versus the ability of these companies to actually generate earnings based on this, and the costs being thrown into this are extreme. So that's all sort of the challenge I think to the AI trade. There's no doubt in my mind that AI related themes will be fantastic for many, many years to come, but I don't know if that means
Yeah.
today is the right day to buy Nvidia. And I would
Yeah.
say from a technical perspective, you can see that there's been a very significant change in the chart of NVIDIA from May, June, and July, which were
Yeah.
primary uptrends,
Right.
higher highs, higher lows, moving averages all sloping higher, momentum strong, relative strength improving. Like these are all classic bullish phases. And
Yeah.
everything that I just mentioned changed in the month of August. NVIDIA has
Yeah.
gone from making higher highs to, kind of static or sideways action, with 185 becoming kind of the new ceiling, which has been tested a number of times here. The momentum, similar to the S&P and the Nasdaq, leading stocks like Nvidia, each one of these tests of 185 have come on weaker momentum. And so what that means is just the days in the middle of this sideways action, there's just not a lot of accumulation signs. It's more equilibrium, right? It's more buyers and sellers kind of being in balance. And so the threat here is you actually break down, and that's what yesterday almost did, and very, very
Right.
close. And so for me, I had an alert set for 170. So yesterday morning, my alerts start firing up saying NVIDIA breakdown because I'm watching the 50-day moving average. I'm watching that swing low back here, a hammer candle like we talked about
Yeah. Yeah.
earlier. Same idea here. And so we traded right there. Ended up being kind of a flat day with the open and close very, very close to one another. So I don't know if I'm comfortable declaring that a breakdown because it was really more of a stalled out kind of gap lower. I think today's session is super meaningful. And if we do get a bounce off of 170 today, I think we go to 185. I think that's a great swing trade opportunity, which I would be a fan of. However, if we
Yeah.
start to break down here and we break below 170 and the RSI pushes below 40, which is right where we're at, that's where Nvidia, you no longer can say that that's in a primary uptrend on that kind of medium term time frame. And then I think it's better playing it at least on the short term on the short side and looking for a more meaningful low with signs of accumulation to play the next leg higher. The problem with stocks like Nvidia that had such a run off the April lows, they have a lot of room to come down and still probably be able to recover from that and move on to new highs down the road, maybe in the fourth quarter. But I think
Yeah.
September ends up being a difficult period here, most likely.
Yeah. What is that? A 200 day coming in around 140. There's gaps there. I bet it's a
Yeah.
fib. I bet it's a fib number. And
Yes.
then it blows off one more time.
I was going to say, so there's all this space from 170 to 140
Yeah.
that, again, using the 200-day moving average as kind of a general proxy for the long-term trend. That's a
Yeah.
lot of space for Nvidia to come down, have a meaningful pullback, but still be able to recover and rotate back higher to new highs. It could be a volatile space there, and it's worth noting that. I mean, a lot of other semiconductors don't look this good, right? They look a lot worse. They're actually leading even further. Nvidia is kind of holding up better than others.
Yeah, even SMH I think is looks heavier.
Yeah.
Could I ask you, Forex trader? I don't know what you're going to tell us. Tell us about gold, Dave. How bullish is it?
Yeah, so gold's a pretty bullish chart, right? And if you think about what we just talked about with Nvidia, right? We had a
Yeah,
similar uptrend a little earlier in the year for gold, and then we've had this big sideways trend that's really lasted for about 4 to 5 months. So gold hits $3,500 an ounce. We haven't seen that again until yesterday when it finally broke back above 3,500. I mean,
yeah,
full disclosure, I have a decent position in the GLD and IAU. I use mostly ETFs. I don't use a lot of futures. And so I'm making decent bets in physical gold ETFs, which are as close as you can get to, holding physical gold as an equity ETF investor. And I've held on to that because the action has been sideways but not negative. So you're not really seeing a lot of breakdowns in price. You're seeing a narrowing of the range of higher highs and higher lows and lower highs, kind of narrowing in a little bit around 3350, 3400. The momentum has been neutral. If you look, the RSI has been kind of fluctuating between 40 and 60. So it's really just telling you there's sideways action. We're waiting to gather more data. And I think we got more data with that breakout to the upside. So the fact that gold's breaking out, I would caution equity investors of saying, all right, this is really bad news for stocks that gold is breaking out because, I mean, look back to January and February. There are plenty of times where gold and stocks can both go up. I don't
yeah.
think you can bet on that relationship as much as some people think.
In fact, they have been overlaying S&P chart on top of that.
Yeah,
It's all been one market. It's just
yeah,
been different magnitudes, except for the debt market. But risk on has been, long gold, long the
yeah,
market, long
yeah.
silver. I guess the key is going to be, um, what do you think about the dollar? We had that little bear market or that pop, nice pop from 96, and people said the rally off that Dixie low was three waves. So it implies a new low coming in the dollar. Does the
Yeah.
chart look that way to you?
Yeah, so for the dollar, it's really sideways at this point. So from a technical perspective, I see this as an absence of momentum. If you look, the RSI has
Yeah.
been almost exactly at 50 for the
Yeah.
last month.
It's a
And what
range.
this indicator here is telling you is basically up days and down days, right? Which are stronger. And if the RSI is consistently at 50, that just means the up and down days over a period of time are pretty much even. So you don't have buyers or sellers really taking control, right? There's no real dominant force in the market. And so it's really telling you to wait. It's telling you to wait and see. So the structure of the dollar is kind of between 97 on the lower end and 100 on
Yeah.
the upper end. I see
Yeah.
this as range bound until and unless we can kind of break out of that. So I have alerts set for the dollar index above 100, which I think unlocks the 200-day moving average and suggests a
Yeah.
much stronger dollar than we've seen.
Okay.
But this initial rally off of the end of June has really stalled out here, and so I'm looking at 97 on the lower end, and for now
Okay.
remains in neutral. I don't think there's a strong technical argument just yet. It's definitely not going down anymore, which is a change from what we saw in the first half of the year for sure.
Okay. There's a guest in the room. His name's Dale Pinkard, and he'd like your analysis on Uber.
All right. Long time watcher, first time caller. Thanks, Dale, for participating. Okay. Yeah, so Uber and other, right? So the challenge that you're going to find looking at a lot of stocks, and Uber is a perfect example of what we're seeing in a lot of different sectors right now, and especially in technology. These are stocks that have had really good runs off of the April low. And then in the month of August, August seasonally is a pretty weak month. And August ended up being fairly okay, right, for stocks, but you really didn't get a lot of significant breakouts, right? In May,
Yeah.
June, July, we're talking about all these new 52-week highs, new all-time highs. You didn't see a lot of that in August because a
Yeah.
lot of charts looked kind of like Uber, where we're testing a previous
Yeah.
resistance. And that
Right.
often is an indication, right? A double top pattern is what we probably classically call that, which is basically a sign that the uptrend is running out of steam. So what happens in this situation, you have two choices. Number one, you start playing that as resistance and you start selling, prices up here, and you're basically betting on a retest of that swing low. or you're just waiting for the break above 97.50. And that's kind of what we saw in the chart of gold, right? We had a clear
Right.
resistance level that was finally broken. So if you don't own Uber, right? If I don't, and I don't own it personally, I'd probably be waiting for
You're
some
the
sort of
only one.
breakout.
Yeah. Everyone that loves it.
Yeah. Oh yeah.
It looks like under 90 that just like the space we showed where we could mean revert, that the
Yes.
mean reversion would be about $80 if we take out this, because both of those moving averages, to me, it looks like, if we don't hold here, it's pretty vulnerable, especially how long the market is.
Yeah, so in a healthy bull market, you expect pullbacks right along the way, but you don't want to break much below the 50-day moving average because then that tells you, all right, it's no longer a good uptrend. This is now something different.
Yeah,
Like in back here, like in fourth quarter of last year, you see kind of what that looks like. We don't hold the
yeah,
50-day, and it's like, okay, that could be the beginning of something worse. So I think we're at crucial support right here. And if we would break, I would be looking around 85, 86 as maybe an initial level
yeah,
of support. But
right.
but again, I all of these stocks are showing weaker momentum readings in August. And what we haven't talked about, Dale, maybe the most important thing, September is the worst month for stocks, and it's not even close. And that's going back for the last 50 years. If you look at post-election years, if you look just since the COVID low, September has rarely been a good month for stocks. It has happened, but it is way more common that September's a big pullback month, and it sets us up for a nice fourth quarter rally. And that's kind of the base case I'm working with now, which means charts like Uber probably don't hold up much longer if that seasonal tendency would play out as expected.
Yeah, I'm looking for a September to remember.
Here's
Uh,
hoping, right?
yeah, or else the other extreme is wake me up when September ends, Green Day,
Yeah,
right?
sober in October is another one I've heard, right? So that
Yeah.
might be the time.
Well, I always appreciate your uh, tactical and looks and the technicals, the work that you do, David. I know you do a lot of things in spaces, and best way for people to follow your great work. What do you suggest?
No, I appreciate it, Dale. It's always a pleasure. Look forward to these conversations and appreciate what you're doing with your show to keep people informed and thinking about some of these movements. Marketmisbehavior.com is my website. I have a YouTube channel, a podcast. My goal is to help people make better decisions using technical analysis and behavioral investing tools. So we talk about what happens between your ears. That's called behavioral finance. And we talk
Yeah.
about how to understand the world around us. That's called technical analysis. So we try to hit a little of both and hopefully we all improve our market awareness, make better decisions.
Well, David's a perfect example of that you can't learn experience. That only happens with the passing of time, but you can learn from the experienced. And
Oh,
David and David has a lot of knowledge to share. And you want to become a good technician, he's a great source for learning. Plus, his demeanor for not being excitable and being rational about the markets is also an edge. So I respect your work, David. Thanks for being with us.
the respect is mutual, Dale. Have a great one, and I'll talk to you again soon. All right,
All right, see you in the fall. See you around Turkey Day. All right, buddy.
sounds good.
All right, my trading warrior brother, David Keller, follow him on X at David Keller CMT and go to Market Misbehavior. And David's always doing some shows on X. Drop in and pay attention. You'll pick up pearls every time you listen to him. So that's a wrap, everybody. Uh, Hope you have a great day. And tomorrow's Thursday. Okay, so we have a couple of days left, and the big kahuna is Friday. So good hunting. Keep an eye on the widower maker, and don't just count your tanks of propane and that gas. Count your blessings. See everyone tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.